The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 25th terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. And I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. We've made it easy because if you cannot dial in, well, you can always let your fingers do the walking. You can send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. And of course, any ping will do inside our Tiger's Den. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 146 point-to-roonies, trading out at 26,400. S&P's up 3.5, trading out at 2840. NASDAQ 100 up about 0.2%. That would be 11 points. So 69.31 is what she is trading at. Russell's off a point. Semis are down 11 points. New York Stock Exchange up just slightly, 21 points to the upside. The trannies are the ones taking it in the shorts, so to speak, off 179 points. So we certainly want to take a look at that. Spot volatility index continues to stay above Stevie's and your 50-day exponential moving average line. This is a crazy market, and it means my interpretations have to kind of say, hey, some of the old patterns just aren't working. And when they don't work, what do? You shelve them for a while, let them go ahead and gather dust out there. Light sweet crude up 35 cents. That's trading out at 65.95. Natural gas up about 2%, trading at 313. Leading the charge here to the upside. It is GWW. That's Granger Worldwide up 21 bucks, nearly 8%. Varian Medical up 13% or 15 bucks. Amazon up 14. Northrop Grumman up 12. Google's up 11. Regeneron is up. Pharmaceuticals up 10 bucks. A lot of double-digit gains out there. To the downside, only 2 double-digit losses. BlackRock is up 12 bucks, 2%. Universal Display OLED down 6% or 11 bucks. The biggest percentage loser. Now I can't say biggest percentage loser on my screen. And when I take a look at on my screen is really the point losers, but percentage-wise, you've got Newell Brands out there. Take that back. That is down 22%. So we have things to look at, but literally I want to look at what you want to look at. And one of our denners has pointed out a 7th wave move inside the 30-minute chart for the Dow equity futures contract. So we can't pass that up. We've got to go take a look at that and show that pattern to you, because we're going to see a couple of G's out there. It's almost as if Mr. Z was reading my mind, kind of like as a segue into what we'll take a look at next. Because why do those G's matter? Why do they matter? You've got to ask yourself, Steve, why do they matter? Well, oftentimes they can identify where you start to see a change in market, the opposite trend of where something came from. In the case here of the Dow equity futures contract, you'll see if we start off from this low out here, it's beautiful to be able to have an automated tool that just goes ahead and counts those peaks for you, because if you don't, you can, just one little tick is what makes that next peak out there. But you can see coming off of the low at about 1:30 in the afternoon. This was on the trading session. Come on. I hate when you do that. Not you, but my system. January 24th. Goes ahead, makes a seventh wave move, does this at about 12:30. Now, when it does that, it gives you that nice bearish reversal signal, the old shooting star. Now, on this chart that we're looking at on a 30-minute basis, so it's acted as it should, but price has only fallen back to support. And you know as well as I do, support on any chart that you, or resistance, in this case here, support, that we're going to look at is always going to be Stevie's red line. If the 30-minute basis time frame is going to give you a move to the downside. We'd have to take a look at other areas of that. You got to see it close below Stevie's red line. Right now, that's priced at 26,375. You'll see it go up by a point or two as price moves. And at this stage of the game, what has happened is this has just got down to support. Now, as I said, as if just by some miracle, somebody would say, hey, Steve-O, I found a seventh wave move. So what does that mean to you? Well, let's go take a look at the other side of the trade that people are not considering out here. And yesterday, you and I took a look at the longer term where the U.S. dollar index is likely headed to. And it's an A to B equals CD to the downside. That is huge, gargantuan. That was looking at the longer term. That was a monthly chart. I just need to get the exact place to start this count. And what you're going to notice, we'll do this in red out here. This is the U.S. dollar index. So if you are a person that believes that the seventh wave, letter G, is important, and I know there's at least a few of you out there, well, then you'd have to, you'd have to ask yourself, well, what's your thoughts about the daily chart for the U.S. dollar index? Because as you can see, yesterday, I believe it was yesterday, or it could have been the day before, has taken us into that seventh wave, letter G. Now, you don't just trade these. Look, inside what I like to see, inside of the Dow Equity Futures contract, you saw a nice bearish reversal signal. At least you have the cavalry at your back. You do not have any kind of cavalry at your back as we speak right now in the U.S. dollar index. But if you are a person that is a believer in that seventh wave move, then this is probably one you should be paying attention to. It's a daily chart. Daily time frames tend to have more meaning than intraday. Weekly have more meaning than daily and so forth. So I can tell you that Steve-O is watching. Now, it could be nothing more if this takes effect. It could be nothing more than just a counter trend rally. And with regard to that counter trend rally, where would the dollar head to? Stevie's red line. And at that stage, this is the solid red line you're looking at on this chart, that would get you to $89.77. I'm not saying that's going to happen and start right now. But, folks, as Inspector Clouseau used to say, when you least expect it, expect it. And so here's what I'm sharing with you. Expect it. All we're waiting for now is for the cavalry to arrive. And when they show up, you'll be able to identify them. Why? Because it will be some type of bullish signal out there. And that ain't no bull. Steve Rhodes with TFNN. That was sponsored by, that was sponsored by Basil Chapman, the king of the letter G. Achievers rise above the rest, and when they see an opportunity, they take action, massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, from 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, and why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go to the inbox of Steve-O. It says, this is from HS. And they, I don't want to give out the names necessarily, but this says, unless you say to. So this says, hi, Steve. Love the show. Oh, I love that you love the show. Can you look at CAMT for me? I'm looking, so let me go ahead and put the ticker symbol in here. Yeah, I'm not really good at walking and chewing gum at the same time out here, so that means I really can't read and type in symbols at the same time. So CAMT, by the way, is Camtech Limited. So let's see here. I'm looking long. I think it could go to 9, maybe even 10 in the next 5 to 6 months. I'd like your thoughts. Also, can you look at STM and tell me your long-term outlook on it? They had real good earnings. So I like this. Be a pioneer of your future, not a prisoner of your past. And, yeah, that is a great line for sure. Lots of meaning there. I could spend hours talking about that, and for good reason, because you know, the whole idea is to always make progress, and typically it's our past and fears that hold us back. But let's just see about the 8, 9, 10 range out here. So when I take a look at CAMT, first of all, it's above the daily, top of its box, so that's bullish. That's at 692. It's above the weekly, which is at 564. Again, trading at 698 right now. So two bullish sentiments. And the monthly trying to close above the top of its box out here. And there's a high volume high. So let's just go to the monthly out here. The top of the box, by the way, is at 693. You're at 698. When I say, sorry, the high volume high. This is the trading session from June 1st. So this is the month of June 1st, I should say, 2017. 28 million shares out there. Now that 28 million shares was actually testing another high that didn't have any volume to speak of. So this says to me that HS, that price should at least get to 796. Now, there were 28 million shares during the month of June 2017. You're pushing into it. This is what, January 25th, with 2.9 million shares out here. So is it going to make it to 9 in the next 5 to 6 months? I don't know. Yeah, well, when I say I don't know, I mean really I don't know. It really needs to clear that swing point, I would say. Again, the price point is 796, and do it with some volume. But volume, schmolium. Let's go take a look at the daily charts. Is there anything out here? We've got an A to B equals CD. What do we have that we can hang our hat on? And we can take a look at this most recent swing point, which was November 27th. You sort of hate to use that because that's like Thanksgiving time. So are the numbers that we're looking at real? Let's just assume we are. That was 186,000 shares, and it was taken out with 1 million shares. So you do have a confirmed A to B equals CD, and maybe this is where you're getting a price projection. Let's go take a look at it. Let's put our lightning bolt pattern out here, and we're going to see that actually the 1-to-1 gives you 750, the 1-to-1 0.272, 814. So I would say 750's in the cards. I think we already covered that, so to speak, and maybe 814. So that's what I see with regard to that equity. And what did my phone just turn off? And then oh, there we go. Oh, it lost that last one. So I know how to go. Oh, man. What was the ticker symbol? And I don't want to miss Mike. So let's see. Let me see here. Okay, talk about gold on the show today. I'd like to know if gold hit a resistance area when it went down earlier this morning. Okay, so we'll take a look at that for Mike. Let me just change this real quickly here because, you take the time to write in. I'm going to take the STM was the ticker symbol. So let's go take a look at that. STM stands for ST Microelectronics out here. And you just wanted me to take a look at that from the longer-term standpoint, I believe. So as we take a look at this equity, this thing is trying to what you want to see this do out here, because there's an A to B equals CD pattern. Not much of one. I mean, not much of a retracement. Now, that can be very positive, obviously. You like to at least see some type of retracement, but because it's as if in this case here, the B point and the C point are basically the same when I look at a monthly time frame. But nonetheless, this says to us, and it was passed with was 110 million, was passed with 83, 85. So look, volume doesn't always give you the right signal out here. It doesn't. When I say right signal, it doesn't always. It's not. It's only one of the legs of a table. Let me just put it to you like that, right? And so it works a lot of times. You like to see it. You like that confirmation. But can you make an A to B equals CD pattern with light volume? Yes. Can you blow away a swing point with light volume? Well, you can certainly take it out. Whether that meets the description of blow it away. So yeah, just one of the legs out here. So with regard to ST Microelectronics, I would say 2630 is the next stop. More likely than not, 2963. If we take a look at this here, I'll put this STM. We'll go take a look at STM on Stevie's other chart pattern out here. I got to do a couple of things. Let me just let me put this on the monthly basis. I may not be getting, I don't know if I'm getting the proper info on the any pullback. Should find support at Stevie's red line of about 1981 out there. So it looks to me like it's going to go ahead and run higher. This thing here, if it can clear, I would say the level of get this out here, the monthly candle from January 2004, that was 29.90. If it can clear that, that would be an area of resistance. To me, I think that's where it's headed to at the moment. So thanks for writing in. Much appreciated. And Mike wanted us to take a look at gold. And what Mike was asking, so let me go back to this question here. Can you talk about gold in the show today? I'd like to know if gold hit a resistance area when it was down early this morning. So that would be a support area, but we'll go take a look at support and resistance. Now, support, from my standpoint, one level of support inside of the gold contract would be 1343. That's Stevie's red line. That is a key level. So when price was pulling back this morning, it did not hit support. As a newsletter subscriber, this morning at 6 o'clock when I put together my newsletters, up at 5 and, just watching some things and doing the newsletter, I put in the newsletter early this morning a downside target where gold would likely head to. And as we take a look at it and see whether it did, and, if you're a subscriber, you can go take a look at it. And the figure that I would have given you was 1357.50. Now, I want you to know that I was absolutely dead wrong on that because it got down to 1357.60. Yeah, geez, sounds like I was dead right. How did that happen? Well, the way that it happened was there was a brand new 240-minute profile at 6 o'clock this morning that formed. And what I knew at that stage was simply that this was a bearish structured box, and price was trading inside the box. And so, yes, price went down, tested support, and has since bounced off of that. So what does that mean? I don't want you to get confused about the U.S. dollar index. We'll just take a look at that on its own and its own merits out there. But if we take a look at gold, yes, gold came down and tested a short-term level of support. Has it hit resistance? Well, resistance inside of the gold contract certainly is 1366.80. That's a swing point. It's one of those 100% moves of a move. You're at 1368.40. If it can close above this area, that's even a wrong price. 1377, isn't it? Yeah, something moved. 1371.70 is a level to be watching. I'll get it all straightened out when we come back from this break. I promise I will. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. So, Mike, 1362.40. is a resistance, a possible resistance level. The bigger one out here is the price level from July of 2016. That's when we saw gold really have a nice run to the upside out there. And that price point is going to be 1377.50. So that'll be the big one. In my opinion, that'll be the big one, because if gold can cross that, then you've got this little A to B equals CD to the upside that it could form out here. You know, whether it does it with volume or not, it still could form, as we just proved with one of the instruments we looked at. I think it was STB or something. That gets you to the 1456 level. So, yeah, we're in this little resistance area. And to, you know, the U.S. dollar index was down, you know, much larger. No, I take that back. Take a look at, you know, I'm sorry, I got to put this back on a daily basis just so you take a look at it. You know, the U.S. dollar index is down pretty much, not as much as yesterday, but not too far away from it, right? And yesterday, you saw gold up about 20 bucks, 20 plus bucks, and right now it's up $7. And so the natural question is why, right? First of all, it's more of a directional aspect than it is a you know, a tick for tack kind of a thing out here. But here's what I want you to think about. Here's what I want you to envision. I want you to envision that instead of sitting in front of a screen, okay, because to the extent you want to go ahead and say, look, we've looked at the correlation of the U.S. dollar and gold, right? So that we've looked at. We know there's a direct correlation, more so now than the yen gold. And we would have preferred to have seen the yen gold structure hold up. And kind of this is the reason why. But I want you to picture yourself. I want you to close your eyes for a moment. And I want you to picture yourself over in, you choose the town in Europe. Maybe you're sitting in London. Yeah, they got a London gold fix, right? So maybe one of you sees yourself in London. Maybe somebody else, you know, you see yourself in Germany. Maybe France. Let's go, you know, any of the let's go to France, right? Let's say pick some favorite city, and you are a trader in any one of those European countries. And when your screen pops up, it's going to be shown in what? It's going to be shown in euros, right? You're going to be looking at items priced in euros or priced in pounds out there, right? And we're just kind of dealing with the big three. So here's what, when you see this demolish, the U.S. dollar getting demolished, so to speak, a lot of it is because of the euro, correct? So now picture yourself, right? Because I know right now you're saying, just as I am, big and bullish with regard to gold, priced in dollars though. Right? Because what if you're sitting at your screen, you're responsible for not just your money, but other people's portfolios out there. Let's go take a look at them. Gold priced in euros. Here's one way to take a look at it. Now, let's take a look at it like this. Well, let's take a look at it like this. Yeah. What you're seeing is gold priced in euros is losing money. It's not breaking out. You're not buying gold hand over fist. Basically, you're selling gold. So what was going on, what I believe, I can't prove it, but what was happening this morning depends on which side of the pond you're on. If you're seeing the euro screaming higher, which we do think that it's even going higher, are you really buying gold in euros knowing that you're going to lose money? No, you're not going to do that. Instead, you're taking the other side of that trade, and gold is a universal kind of currency out there. And so therein lies the real resistance, Michael. That doesn't mean, hey, exit your trades, things of that sort, but you need to be able to, I'd like it to be able to kind of keep this in a perspective, and this is a one world market out there, but where the selling's coming from, okay, or should be coming from, is over in Europe. Where the buying right now is coming from is because it's like a big party. And I'm enjoying the party, and I'm not going to be Debbie Downer and party pooper out here. I'm in this trade for the long haul, or at least I believe it is. And to the extent that you say, Steve-O, come on, you're overplaying this. This is just a bunch of hype, and it doesn't really matter. Well, look, the biggest run that you and I have seen in gold takes us back into 2015, right around December 18th, 2015. Remember, we're looking at a line chart, so we're just looking at closing prices out here. And I want you to here. Let's grab a a line out here. I mean, you can see it, but I want you to clearly see it. Let's do a yellow arrow out here. I want you to take a look at this run in the euro from the exact same swing point up to its highs out here, right? Up to its highs. That's in U.S. dollars. You take a look at this same chart here, in essence, in euros, okay? And look where it stopped. It stopped at the first high out here, but it made it right to that high, okay? There was a slightly higher high that formed back in August of 2016, and there was a lower high that formed in August 2016 in gold priced in euros. And what took place from there was a nice, healthy retracement out there. So why would you think that it would be so you have to visualize, where is it that you're trading? What trading desk are you sitting on? What currency pair does this thing and if you take a look at where we are at now, yes, both gold price in dollars and euros made the same move December 12th. There's no doubt about that, and began running higher. And what gold priced in euros did was it topped out. It topped out where it did that 100% move by getting back to a prior swing point, which was November the 9th out here. Gold price in dollars just simply blew right through it out there. So a short-term positive. If the euro turns around, okay, and the U.S. dollar index starts to strengthen, that may not be all that bad for gold. Maybe gold is just going to move sideways in a bit of a retracement out there. I don't know. But what I do know, here's what I can tell you with conviction. Not like a little conviction, not like a lot of conviction, but with a ton of conviction. In order for gold to just simply continue to scream higher, we need to see it breaking out in all currencies out there. And it's not doing that right now. And that is a problem. If we take a look at, if I can find the chart out here, I know I've got it. Where did I put it? I thought I was moving it around. I'm going to find it for you. I have to find it for you. Maybe it's right here. Is this it? Is that it? No, that's not it. Come on, Steve-O. I thought I had this thing. I went and pulled it up because I earlier this morning. So where did I put it? We're going to find it. Here we go. Here's gold. Price in dollars is on the left-hand side of the chart out here. All right, and here is gold in the next to it, panel number 2, priced in euros. Take a look at that chart, right? So it hasn't broken out at all. In fact, right now it's down towards potential support. So it's down towards potential support, which kind of fits right into the potential U.S. dollar index scenario. Not this moment, okay? Not this moment. Can continue. It will continue going lower until a bullish reversal candle shows up out here. But gold price in euros is down towards the bottom of a channel line, a trend line out here. If you take a look at gold priced in yen, it's right up against resistance. You know, so you'd like to see gold priced in yen breaking out. Here's its descending trend line out here. It's really right up against resistance right now. And gold priced in pounds hasn't taken out a swing point. You know, it's not even up near its resistance zone out here. So really, in order for, if you take a look at these moves out here, and you can, if you follow my, when I put my cursor in one area of a chart, it shows up in the same, in essence, price point as the other charts out there. See how when they're moving higher out here, again, these are longer term charts, it's got to all be moving in the same direction out here in order for there to be a huge partay. Michael, that may have been a lot, but hey, you asked and I gave. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we've got a question here from John in Sarasota. John, thanks for writing in. And John asked a really great question out here, which is, what do I need to see before maybe getting into DBA? And DBA happens to be the PowerShares Agricultural Fund. And we have the ETF. But the most important thing that I could share with you, and I was trying to pull this up during the break. I'm still trying to do it and multitasking, you know, about that walk and chew gum thing, so it's not working out real well. And I don't know what's going on with my computer system here, but it's not letting me pull it up. But dude, this is going to be a basket, I believe, of not a basket case necessarily, but a basket of agricultural futures. I don't know if it's wheat, if it's rice, if it's corn, if it's well, let me see. This just popped up. Does this tell me anything? Does this tell me anything? Anything? Holdings. There we go. So this is as of last night. So John, 13%. So if you want to trade this, okay, because you're saying, what do you need to see? You need to see screens that show you the soybean futures contract, the specific month that it's trading. I don't have that. It's not showing me that here. That represents 13%. You need to take a look at what's going on with corn. That represents 12.78%. And you got to figure out which contracts they're talking about. Wheat, 12.6%. Cattle, 12.3%. Sugar, 11%. Coffee, 11%. Cocoa, 10%. Lean hogs, 8%. Feeder cattle, 4%. Cotton, 3.5% out there. And then, of course, you've got treasury bills and so forth that looks like with the excess cash that is out there. And so you've really got to understand what's going on inside those futures contracts, which really makes trading this vehicle very hard, a lot of work. Now, it can really be to your benefit. But if I were just to share with you what it is that you need to see by looking at this screen, I would absolutely be doing you a horrible disservice. And I am not into doing that. In fact, I am so against doing that that I can't. I won't. So that's really important. I mean, thank you for asking that question. And look, you may be a long-term bull when it comes to, you know, the agriculture fund. I would suggest, and here I'll just punch open this screen out here, and this is all because of reverse split. Well, maybe I think it's reverse splits, but even if it's not, it's not a wonderful looking stock chart out here. But I would rather you find something that's a little bit easier to track. Like the guys in the den or gals in the den know, the Tecrium has some funds, right, that are just simply, at least you're just looking at one futures contract versus this whole spread, right? I think they've got like a wheat fund and they've got a corn fund or something along those lines. Check that out, John. And then it makes it much easier, because then and so you can't trade it. I won't let you trade it unless you have access to the actual futures contract that you can focus on and pay attention, look for patterns, things of that sort, so that it keeps you honest out there. And the real way to trade these futures is to trade the futures contract. Because at least at that stage, you're not stuck into an ETF that's really trading for 6.5 hours a day, and you can have your stops in, and that way, something that happens in the off trading hours, you're not necessarily snookered. Now, I'm not necessarily asking you to be a farmer, and I know this goes way beyond what do you need to see. On the other hand, I think it's answering the question. I think it's a great question, and because it helps me to at least offer this to I'm not just speaking to you, to really everybody else that's out there. But for me, even though I think, hey, we're in a bull commodity, maybe we are with the U.S. dollar out here. It's this is not moving. But you've got to be able to go see what's going on in each of those holdings out here. And DBA is probably not the best tool for you to do that. And I could be dead wrong, and that's okay. So thanks for writing. I appreciate it very much. We've got another question, I think, that came in, if I can find it. No, I think that about does it for the email questions. But please, this is somebody else. Let your fingers do the walking. And so let's just go back and just kind of surf around, surf in Safari, see what it is that we can see out here. What do we want to look at? I suppose the general markets, something that maybe you guys have interest in. So maybe the question is, hey, Steve, what are you watching? Oh, I know we can look at. We talked about the trannies being down. We talked about the semis being down. So what signals are coming from those indices out here? Let's go take a look. Let's go take a look at the transports. We'll pull up Stevie's Ninja Trader charts out here, because it's going to be more helpful to us. We want to see, hey, what pattern, if any, have the transports completed out here? And I don't know how this works. I just know that it does. We give a dinner that says, hey, go look at the Dow equity futures contracts, that seventh wave move out there, and we do, and shows a short-term top, and then I say, hey, as long as you brought that up, let's go take a look at the seventh wave move in the U.S. dollar index, and now we pull up the transports, and where did it top out? Right, so it's either topping or it's bottoming. And does every move top out in wave number 7? No, it can be something less than that. It's just an additional tool, and when it shows up, the hair on your back of your neck should just kind of start to stand up a bit. When it should really stand is when you see price close below Stevie's red line. Well, that was 3 days ago. 11,350 is Stevie's red line. And as long as that is now resistance, as long as price doesn't get over that, says the transports want to pull back. Pull back. And can the transports pull back and the Dow continue screaming higher? We all know the answer to that is yes. Where would be a target for the Dow transports? I would use this red dashed line. It's around 10,612 out here. That marks the beginning of a Tommy DeMark setup 9 count out there. So we would be looking at that as a spot. But the transports have definitely provided you with a topping signal, much like the U.S. dollar index. See, here we get a 7th wave move, and we get a bearish engulfing candle, and we get a key reversal session, and it was an A to B equals CD pattern, right? If you're going to learn how to sell the D point out here, you get that signal. So you have a number of different topping conditions that come into play out here. So it does look to me like a good candidate for a move lower, for those of you that want to play that, would be inside of the trannies. We talked about the semis out here. That's the only other thing that shows up as red on my screen, down about 8 or 9 points. What do these semis have to do, or what are they doing? And as we take a look at them, they have completed, or they did complete about a 1 to 2 or 1 to 1.618, A to B equals CD. We see that pattern out here. Let's get rid of it. How did that pattern confirm? Let's go ahead and get the crosshair. Very simple. You had a gap to the downside, turned out to end up being not a gap because the high of that session from yesterday went ahead and touched the low of the prior day, but because the candle formation was a bear separating line, which is just as bearish as a gap to the downside out here. Now, price yesterday did what? It stopped at Stevie's red line, support. What did semis do this morning when they opened? They bounced higher because support was never broken. Right now, it's broken. The close today for the semis is important to close below 1362.60, says this too will pull back. And right now you target the swing point from January 10th. Steve Rhodes with TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back. I love that Power Trading Hour, so make sure you stay tuned for that. James writes in and says, Steve-O, what do you think about the Russell 2000? I like when you call me Steve-O, by the way. And so when we take a look at the Russell 2000, really a couple different things that we can do. First, let's start off with the cash indice. Then let's see if we've got time to go take a look at the equity futures contract. Now, I don't make this stuff up, right? So we know how we like to pay attention to any market that sings in the key of G. Now, when you take a look at the Russell 2000, And you start from the swing point high in October the 5th, 2017, and you start doing your wave count to the downside. What happens? Well, you get to wave number 7. That was on November 16th. The number's November 17th. You get a nice bullish reversal signal. The very next day, you get above Stevie's red line. Now you've got a rising price oscillator above 0, and the Russell 2000 takes off, continues to move higher. Moves higher till when? Well, at this stage, till yesterday. When it does what? Makes a 7th wave move, moves higher with less relative energy, and makes an A to B equals CD. You've got all of those patterns. Here's the A to B equals CD. So you got, what, 3 potential reversal patterns coming together at the same time. I say potential. You say potential. Here's the real pattern out here. Come on, come on. There we go. Stretch it. I'm having a little system thing out here. There we go. It doesn't make the A to B equals C. It made a longer term one. But anyway, now what's it doing? James, you asked what's it doing. And he had a bearish reversal signal yesterday. It hasn't broken support. Until this breaks support. When I say break it, I mean closes below it. Then this 7th wave move, this stretch, may just simply be nothing. What are those red horizontal lines, Maria? Those are Tom DeMark support or resistance levels out here. That red dash line is the beginning of a TD setup 9 count out there, and that would be a target. But it's the first red line, Stevie's red line, that has to be crossed. So right now, neutral to bullish, can't be bearish. Russell 2000 hasn't broken through support. Folks, stay tuned. Your favorite polar bear mind, David White's up next. It is Thursday. Tom O'Brien, 3 to 5, and Andy Heck, 5 to 6. I'll be back with you on Fun Day Friday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.